We've got a special guest with us in studio today, Dhanpal Jhaveri, the Vice Chairman of Everstone Capital and CEO Eversource Capital, joining us right here in the studio. And, it takes a long time to get you in here, Dhanpal, so we're very happy we get this opportunity to chat and grill you on all the current trends.
Thank you both very much for having me here.
So where do we stand right now? There has been so much news flow and, and so many various things that we're hearing. Difficult to get a sense of exactly where we're at currently with regards to deal flow, with regards to the kind of sentiment on the private equity side.
Yeah, so let me take it up in two parts, right? One in terms of flow of capital, and I think India continues to be one of the top destinations from an FDI perspective in the global markets. We clearly are within the emerging markets and I would say the developing markets seen as a country which offers secular growth, a country which has, being a democratic country, having a lot of reform activities which is supporting this secular growth, even though there is short-term pain. And finally, I would say broadly a legal and judiciary system which kind of largely works, even though sometimes justice does get delayed. So there continues to be, I would say, I always like to use the word cautious optimism about global investors wanting to put capital to work. Clearly, timelines need to be kind of one where it's patient. Investors, need to kind of be patient with how they expect returns to happen, and need to be deep and long into this country because it's a fairly, I would say, complex economy to understand. There's no one kind of homogeneous market, and therefore, from an investing perspective, clearly, people want to kind of be here and learn India, and then through the period of learning, I would say, understand and appreciate how to generate returns.
And I want to touch on that a little more because in your wide experience, you've been here now for many years, as Everstone, really, finding opportunities in the Indian market. How have things evolved, and then how has your strategy evolved as well?
Yeah, sure. So essentially, as you rightly said, we've been now in India since 2006. So it's been a fairly long period of time. We've had our learnings, like I said, scars on our backs, in terms of what works and what doesn't work. And I would say over the last 10 years, we've actually created a fairly, I would say, consistent playbook where we think that what we are good at is essentially either in buying and growing businesses. So we take control and we look to grow those businesses, or we essentially also look at an alternative to build businesses from scratch. And the build option, which what we call a platform businesses, is interesting because India offers significant, I would say, multiplier growth over a 5 to 10 year period, which means you could get into certain sectors, into niches within those sectors and actually build a business with, I would say, a position to rapidly scale it in a 3 to 5 year period and build size and build, I would say, a reasonable market share also. That opportunity is not easily available in most developed markets.
Right.
And that's something that we are very excited about when it comes to investing in India.
In India. And Pal, as we said, it's tough to get you here. So since we have you, let's grill you as much as we possibly can. We look at the headlines constantly, and there's that Burger King IPO. And of course, with your investments, Everstone's investments in the company, can you just tell us a little bit more in terms of what you can share here?
Sure. It's obviously we are in quiet period, but Burger King's been a very exciting journey for us. It's one of the build strategies that we adopted where we essentially partnered with BK Corporation and set up that business in India in late 2014. And it's been a crazy 5-year journey. We've scaled and built one of the fastest growing QSR businesses. We hope you've had the opportunity to dine out there or lunch out there, or even now we serve breakfast out there. But it's clearly the whole, I would say, Indianization of the brand in terms of complete localization of the menu, a completely local team which has been literally put together, and a great leadership team that we have over there who's, I would say, literally brick by brick built this business over the last 5 years. And again, it's one of those stories about a sector where 95% of dining out in India is essentially unorganized. And so we're really scratching at the surface in terms of the scale of the opportunity for players who can provide value to consumers. And I think that's something which we think in India cuts across sectors, cuts across businesses, where if you can deliver value to consumers, there is a very large potential consumption market in India.
Okay, so exactly, consumption. I want to talk about the themes that you're now bullish on, where you're seeing the maximum traction, what you as a fund are looking to invest big in and are already investing in. So consumption clearly must be one of the top themes.
Clearly a big theme for us. And I think we think of consumption in a very wide basket. It's literally everything that you would look at from your own wallet, how much you spend, from education to healthcare to essentially, stable discretionary consumption, entertainment, etc. Healthcare for us has been a big theme. We've actually been very actively investing in the space. We've also had some, good exits. We were very early investors in global hospitals, which we eventually sold, and we've recently made an investment in another hospitals business, Sahyadri Hospitals.
Yes.
We've invested in, I would say, medical devices, where we've now bought into a very, very interesting stents company, growing extremely well, and we are clearly looking to now use that whole Make in India opportunity to now serve global customers over there. We've got a strong play on pharmaceutical distribution. We've got a very strong play on medical device distribution. And we're also looking at the whole, I would say, the generics market, both in the US and Europe, from an India sourcing base.
We're seeing that playing out in the listed market as well. So clearly that's a huge opportunity. And what's interesting also, Dhanpal, is while you're looking at, of course, hardcore assets, you're also looking at the disruption play, the entire tech disruption angle. So you're looking at the entire spectrum, really. On the tech side, what's catching your eye?
So we are fairly defensive in the way we think about capital. First, whenever we put money to work, we always first think about return off capital and then return on capital. So a lot of the tech, especially consumer tech and other tech plays, have been largely about creating markets. We are not as much in those areas. We tend to be more, I would say, using tech as an enabler to build our businesses and scale them up. So from our perspective, tech services continues to be a very interesting play. India, I think, has huge pool of skilled talent, and which I think is global in terms of their capabilities. We've seen it demonstrated in Silicon Valley, and we're therefore buying businesses which have a strong front end in markets like the US, and with backends either in India or other parts of Asia. So we have a very large BPO business which we own and run. We've basically looked at interesting tech services businesses that we would love to own and run, and that's I would say a broader kind of a tech strategy for us.
And in terms of the overall valuation picture that we're looking at right now, are you sensing that we're seeing it topping out?
So it's I think the tops are clearly there depending on where you look at, right? So we look for deep value in everything that we do. So my sense is that companies which are fully discovered, which are clearly highly liquid, especially from a market's perspective, are the ones where you're seeing rich valuation, and that's largely because I would say that public market investors are generally, I would say, driven by liquidity and flows rather than necessarily by looking for deep value only. From a private perspective, we tend to look at businesses over a longer cycle, over 5 to 10 years. And our play over there is what we are seeing over here today is, one, because of the stress generally in corporate India. So there are lots of hidden gems over there which are attractive and which we clearly would like to own. Second is, I would say, the broader, slowdown in the economy, throwing up, I would say, certain challengers, which are differentiated business models, access to markets, and the way they're kind of thinking about growing businesses. Again, those are the kind of, I would say, plays that we like and are interested in. And then finally, I would say that, we tend to use averages to kind of define the state of affairs today. And therefore, we actually, we think we are a market with very fat tails.
Sure.
Where while you have businesses, the economy at 4.5%, you have businesses slowing down and degrowing at 20, 30, 40%. But on the other side, you've got businesses growing at 100, 200%. So the new fund that we set up last year focused on green, right? Investing across the decarbonization value chain and focusing on resource efficiency. We are investing in those businesses where we are seeing not I would say, an arithmetic growth in terms of percentages, but we are seeing a geometric growth in terms of multiplier effect. Renewable energy, energy storage, electric mobility, water, waste management. These are all areas where we've had absolutely zero, I would say, plays in India. Solar and wind, I would say, are the only areas where we've now made significant investments as a country. But all these other areas continue to be, I would say, virgin territory in terms of growth.
Is this an area that has its own unique challenges in terms of, of course, with financial backing, there could be exponential growth. But in terms of the market, is it ready? What do you feel? So
great question, because, in all of these, the big concern is that, government Is it kind of supportive? I would say yes, that's a big checkbox over there, because the government regulations and the political will is extremely strong to kind of make these things happen. The second area is clearly that are these businesses, where you're essentially ultimately providing some sort of a service, right? At a level where today the market can afford it and pay for it. So the total cost of ownership, if you look at across all of these sectors today, actually has dropped to levels where today the economic model and the economic viability of these businesses there without any real form of subsidy or support, right? It's more enabling regulatory environment and a market where kind of we think clearly, you could actually deliver certain types of businesses which could actually make economic sense. Solar, for example, today is already the lowest cost of energy as compared to any other form of energy. Right. There's a question of solar clearly because it is intermittent, but battery, which provides energy storage, is fast also seeing costs come down. $1,000 kilowatt hour battery 5 years ago today cost $200, and it's likely to continue. Because of the scale in electric vehicle penetration globally, battery costs are going to come down over there. So if you add solar but storage and then start delivering, we think in 5 years' time it's possibly the only real significantly scalable form of energy that can be deployed.
So what's the deal flow we should watch out for, anticipate now going forward, in terms of size, frequency, anything you can tell us?
Well, we are all quite shy about all these things. You'll meet anyone, we don't talk about it. But I think, what's interesting is that now we've got very serious, large capital also now focused on India, which is a big positive. So in many ways, we continue to think that there are a lot of younger and I would say smaller size funds who are feeders to funds like ourselves. And in turn, we are also, creating businesses which are $500 million businesses, which are potentially feeders to the larger funds. So we do think that I would say financial investor, as if I might call the term animal, is here to stay. We are much more focused on growth as against other markets, which are more, I would say, using financial engineering to kind of generate returns. And therefore, most of our returns come from operating growth in the businesses. And that's good for India. So this capital is great for India. And I think we should do whatever is possible. Streamlining tax, streamlining regulation, streamlining the inflow and outflow of capital from this country to just make India possibly we literally have an opportunity to do that today, to make us the preeminent destination for foreign capital.
Fabulous. Dhanpal, great chatting with you this morning, and thanks for putting it all into perspective for us. It sounds very exciting.
Thanks for coming back.
Thank you very much.